Hey, US dollar is down, the stock markets are bouncing a little bit, and gold is recovering. Let's talk about all of those in today's video. Welcome to myfinancesteacher.org. Let's start with the US stock market, and as I mentioned to the members at myfinancesteacher.org over here last week on the 6th of January, I was expecting the decline into the ongoing short-term daily cycle low to unfold with a bit of a bounce followed by one more leg down into that last daily cycle low, giving us more of a usual duration for a cycle versus the cycle lasting for only 38 days if the low is in over here on the 10th of January. So my most likely scenario is that we will still have one more leg down perhaps over the next several days. Looks like my scenario has been postponed a little bit and perhaps stretched on the levels a little bit as well. On Monday, we see S&P 500 poke below this intermediate cycle uptrend, so perhaps one more poke, a deeper poke below that trend line will give us that short-term daily cycle low, which will be followed by some sort of a rally into the next cycle, but perhaps by then the intermediate cycle will be past its midpoint, will be getting somewhat old, so perhaps this rally into the third daily cycle low is not going to be fantastic before the decline into the intermediate cycle low takes place. And of course, the drop in the dollar over the last several days, especially yesterday, is helping a range of assets, including the general stock market, including gold, including energy. And the last time we looked at dollar and gold, if memory serves, on the 4th of January, we were expecting some sort of a drop in the dollar into this already extended short-term daily cycle low. Perhaps this drop into the cycle low doesn't have much to go because the cycle is already pretty old. Usually these cycles last for around a couple of months. Now it's already 77 days old, so perhaps just a couple of days longer to allow the dollar to retest this support zone that has been respected for quite a while, as you see from early 2020. So I do expect some sort of a bounce from that support zone. The support zone is somewhere between 94.3 and 94.7. And I don't think that bounce is going to be strong because I still would like to see a more significant decline into the intermediate cycle low in the US dollar. So what that translates to for gold is that I think this bounce that we've been observing over the last week or so is a bit premature for a new intermediate cycle rally. It's highly unlikely that this daily cycle in gold finished after lasting for only 23 days. So as dollar bounces perhaps over the next couple of weeks, we're likely to see that last move down into the intermediate cycle as well as the short-term daily cycle low. How significant the drop is going to be, well, that still remains to be seen. But as I've mentioned in my recent video on gold, again on the 4th of January, I think that is going to be a nice buying opportunity before the next intermediate cycle rally. Let's have a look at a few other markets. We're looking at iron over here, and I've actually been observing iron for already quite a few weeks. And over here, when the iron prices were reaching this resistance zone from the August low as well as the October highs, I was expecting iron to cool down. It did happen, but with my expectation for iron to cool down, I was also expecting for Rio and Vale to cool down as well, but it didn't actually happen, as you see. As iron declined a little bit from that resistance zone, I was expecting to get into Vale at a better price, perhaps somewhere just below the 50-day moving average. And I do already have a position in Rio together with the members at myfinancesteacher.org. So this recent rally has been quite pleasant so far. But I was actually expecting to get a larger position as iron cools down a little. Still, this rally is pleasant, although Rio is getting overheated right now. It's at resistance from the 200-day moving average. So I'm fine with not being able to increase my allocation recently. I think there'll be another chance. After all, after this nice rally, I think it's likely to see some sort of a cool down. A quick look at cryptos. As I mentioned a few days ago on cryptos, they were likely to bounce. Bitcoin is bouncing. I think the Bitcoin cycle didn't actually finish over here on the 10th of January, as that would give us some sort of an unusually short cycle lasting for only 37 days. As I mentioned in the previous video, we're still on the same track for a relatively sideways to down cycle in Bitcoin. A bit of a bounce perhaps to the middle of the Bollinger Bands, to this resistance zone up to a couple of lows over here in the second half of December, as well as at the end of December. So that resistance zone is somewhere around $46,000. And after that, I would expect one more decline, maybe a mild one, maybe a more significant to give us a lower low into the end of the Bitcoin cycle. And lastly, energy is doing really well. Crude oil is now over $80. Crude oil cycle is still pretty young at only 42 days old. So there is still some potential perhaps within the ongoing intermediate cycle. Although crude oil is already close to the resistance of the previous highs and the 14-day RSI is approaching that oversold level. So what actually happened over the last couple of days is that my partial limit sell order on XLE triggered at 61.9. I think there will be a chance for me to reload on energy again, particularly on XLE, at a lower price of the support zone from the previous high on XLE. Maybe a bit of a cool down, at least down to that round number around 60. So these are some of the things that we've been doing with the members at myfinancesteacher.org, although there are a lot of other assets that we follow. So if you're interested, you're welcome to join us at myfinancesteacher.org. Bye-bye.